Another bloody day in the stock market. It is 18th of May. Let's take a look at what happened, guys. Oh my goodness. I am your host, The Cowboy. This is Elliott Wave Cafe. This is chart of the day. Let's get started. All right. So, pretty interesting day. A lot of sell-off, anywhere between, 4% into the S&P 500 down to almost 5% in the Nasdaq. New York Stock Exchange overall about 3.2%, Dow 3.5%. So everywhere you kind of looked with the VIX climbing higher towards 31, this market has been, completely taken down, and in one of the sectors, in a couple of the sectors that you would expect a little bit more protection, there was no protection today. So you could look at utilities, which is only down about 1%, but I mean, look at the consumer staples, which is one of the places where people usually hide when it comes to stock market volatility. They wanted to get into lower beta assets and things of that nature, and this thing was down 6.5%. Technology, surprisingly wasn't that bad. It was just kind of the third from the bottom. Consumer discretionary, again, just with the with the consumer here getting hit with all these stores, but utilities and energy also got taken down, healthcare, financial, but it's been pretty much a bloodbath across. What I'm noticing though, in some of the high beta stocks, the ones that, like in the Cathie Wood stocks, ARK ETFs, things like that, those things have not really been hit. I mean, I think they've beaten those things to death so much that there is not a lot of juice left to squeeze out of those things. And I think there could be opportunities there because those things were just pretty stable today, and they just went after the large caps and safety and all the other ones. So you can see in here, I mean, you can look at the list of the S&P 500 target down minus 25%, Dollar Tree 14%, Cisco and Costco and Dollar General and Etsy, and just a bloodbath here in the S&P 500. And you look at the Dow Jones, I mean, Coca-Cola and Walmart and Procter & Gamble, Nike, Apple, all these guys have been just in a kind of large sell-off. So not a pretty picture overall. I'm looking at bonds, 30-year yield coming down here. You can look at the TLT pushing higher, right? So a little bit of a hiding in the bonds, but not a lot. The dollar wasn't up much either. So this is very surprisingly with such a sell-off in the market, you would expect a lot more safety towards the dollar, but I think some of the funds have just moved into the longer duration bonds in here on the 30-year, on the 10-year, not as much in the 2s and the 5s, but a little bit of a defense in there. And commodities, gold was stable, so maybe there was a little bit of safety in there, although it did not rally much. Commodities got taken down. Energy, copper, you can see oil. Natural gas I'm actually short natural gas from these levels. This is UNG, but I'm shorting them via the futures. So /NG or /QG if you're interested. That's the tickers there if you have a futures account. And this is up about just 18 basis points. Corn, I'm another one that I'm short on this market. We shorted a little bit higher via futures /ZC. It's the ticker there that you can short corn. And I'm looking for this market to kind of come lower. I think the commodities have been long, and I think they're going to go next after energy and commodities. So this is kind of where the market was today. So not a fun place, but I think some of this thing, it's exaggerated. I mean, we have enjoyed, a little bit of a pullback in the markets for the past few days. So since Thursday, Friday last week, we've come into a little bit of a retracement. Here is the Nasdaq that we're going to take a look at today. The S&P 500 I've covered yesterday with a very nice rally. Came into resistance. I was expecting it to go a little bit higher towards 4150, 4200. It was close, but not. We didn't get all the way up into these levels. Nasdaq got pushed lower. So you can see this is a one-day chart. I'm still looking for a recovery here. I think this sell-off here, it's a little bit just, exaggerated after a little bit of a recovery here. We'll see if it's going to get traction. I mean, the markets are very jittery. The RSI is not really dropping. It's diverging here, but it's trending lower. So, there is obviously a further risk, in terms of price, but overall, it just doesn't feel like you're in a major crash mode, if you can call it that. So let's see here. Let's go to maybe let's go to a 2-hour chart and see how the Nasdaq looks. That was the longer idea, right? That we're still in some kind of a larger correction here, either a W, XY, or maybe an AB down in C with further recovery. We'll see how that goes. I continue to repeat that until we're actually, pushing higher above some of these key levels, some of this trend lines, some of the moving averages, you won't really know how this correction will finish and will unfold. But, what's happening here near term could be more, I think much easier to read, I would say, right? So, I still think we're going to get a little bit of a bounce in here. So going back to a 1-hour chart, I was excited about this move. Obviously, it was something that we expected based on some of the indicators that we've seen last week that were very extreme. And I'm going to go through some of them in this video as well one more time. And this was a pretty impulsive move with the correction here. Then you've got another impulse, another correction. So, I started to think about it as more of a leading diagonal type formation where you have a wave one that's impulsive, a second wave corrective, and then I was looking, hey, maybe we can get a little bit of just more of a more normal decline, or more of a normal setback. But the market said, screw it, no, I'm not going to play that game. I'm going to twist a knife in here in the longs, and I'm going to make them feel it, because when you see such a drop, it's like, holy, we're going to go to new lows and this thing is going to crash, right? So, and this is usually how it feels when you get a second wave, sometimes after a leading diagonal, sometimes after very deep lows in here. You're getting the first impulse, that's like the excitement recovery, and then they're coming back after it and say nope, and they get everybody scared one more time before you actually begin to rally in a much larger third. So these are wave 2 type moves sometimes, or a wave B type move. But if this whole thing was just another fourth wave, and my subdivisions here are wrong, then you're probably going to get a 1, a 2, a 3, a 4, and a 5. And before you know it, you're going to be down to 11,000. So these lows here are still kind of holding. They have held today with the S&P 500 as well. So look at 11,710 in here. We'll see what's going to happen overnight, how much they're going to attack these, and if we're going to recover. The RSI is deeply here at about 15. So, this is just on the hourly chart, but similar places where we've had such a deep RSI, we've gotten a pretty decent bounce. So we'll see what happens here. We're going to continue to kind of monitor this. I'm going to stick with the long call. And if we're breaking below these levels, it's probably going to be tougher, and we're probably going to push lower. But I would not put anything past this market. This fifth wave could be maybe a very quick move, and then you're going to go up into a recovery. So, the VIX is again at some extreme level. I mean, some high levels, but not that extreme. So, it's just a mess in terms of sentiment. So navigating this thing is like, you're on your little boat and this ocean is making all this huge waves, and it's like, one day you're up, the other day you're down, and you're trying to make sense of sentiment. So, swimming in these waters is pretty tough. I've been trying to skim trades here and there. I mean, long Nasdaq, short VIX, short commodities, just kind of try different things in here. I was, pretty okay, but the portfolio hurts because these things continue to kind of push to the downside. So, that's the nature of the beast. This is where we are in the month of May 2022. It's crazy. But let me show you a few interesting charts that I'm going to kind of walk you through here. So I kind of covered these, and let's start with the VIX. So the VIX, the volatility index of the Nasdaq VXN, you're seeing it in here. Some of the highs there were about 42. Now, you're threatening to make new lows in the Nasdaq, and you're seeing it, right here. And what's happening, and actually, no, this is actually, yeah, no, it's the Nasdaq 100. I'm sorry. Yeah, that's fine. I was just looking. Did we make a new low on there? Because on my futures, it doesn't show like that. So anyway, I'm going to have to double check that. But here is the VIX kind of coming back towards 38, 39, you know, with the things making a low. So not a huge explosion. We are still in some, you know, very elevated levels here of volatility, you know, and we're definitely going to be watching this area. I would tend to be, you know, more of a seller of VIX up here because the fear is so big, and usually it pans out to push back to the downside, you know. And if you're getting a huge volatility event where this thing kind of squeezes toward 50 or 60, then you're going to get a massive capitulation lower. And who knows, maybe that's what the market is hunting. But for right now, you know, those levels are continuing to hold. I'm looking at the new highs minus new lows. These are on the Nasdaq, you know, the Nasdaq composite. So this is on the 3,700 stocks that are in the Nasdaq composite, not on the NDX. And these ones have only declined by, you know, about 188 stocks that have made, you know, new 52-week lows today, you know, and you've had extremes much bigger than that, you know, from 1,000 to 1,200 last Friday, last Thursday. Remember when those things were kind of pushing lower? I wrote in the article about it as well. So as this thing is moving lower, you're not really getting a bunch of sell-off in the Nasdaq composite. So, and here is the look that kind of looks at it a little bit closer on the daily basis. Right, so this is kind of what happened today. You know, 188 issues declining in here, and making new 52-week lows, and you can see the index right in here. So you know, I don't know what's going on because it's you know, we're kind of, so there could be some underlying strength in here that's just you know, they're just not responding to this further weakness in price. A lot of these stocks maybe have been so damaged that they're just not making new lows anymore, and they're kind of stabilizing. So, I mean, look at this guy. It's just kind of flat in here, and you know, you know, every time, I mean, as you were kind of selling off in here, you were continuing to make them. You could see this divergence in here, you know, on the 52-week low before you had that big rally, you know, from March 14 all the way to about a 2-week rally here. This divergence kind of told you that, and you're getting something similar again. You know, I mean, it's not to say that you cannot get back lower and you know, when you get a massive crash, but what's happening here, you know, under the hood, it's very interesting. You see, into this low, you know, you kind of went down into some big extremes in here, right? 1,700 stocks, and here you're you know, climbing a little bit, but today not that much, only 188. So, well, you know, we'll keep an eye on this one as well. Here is what's going on into the breadth 250. You know, moves towards the low one more time in here. You know, the breadth, it's still, you know, pretty bad, but stable. So you're coming back on the stocks above their 50-day moving average, only at about 11%. This was lower. It was only about like 7 or 8%. So a little bit of a divergence there. Below the 200, they're squeezing them lower, right? They're coming back almost to levels from 2020. Those are at about 13% only. So maybe they just have to flush down a few more stocks, get back in the 7 to 10%. And then you can probably, you know, have a little bit of a better capitulation and then push to the upside. So I think we're very close here. It's things are definitely looking interesting. Here is the VIX, the volatility of the VIX. So that's the VIX for the S&P 500 here. And, you know, you're looking at it up here at about 31, but the volatility of it, it's still very, very low. So there's not a huge fear in the market. I mean, the more it's struggling to break higher, the less volatility we're getting into the VIX. So it's almost like, you know, we're breaking out from a cold in here, and the fear kind of starts to subside in a way, and you're trying to recover because the volatility of the VIX is not pushing. So this is an interesting indicator. Guys, listen, don't forget to subscribe and like this video, okay? Because you you know, I haven't asked you to do that in a while, and I appreciate you being here all the time and sticking with these videos. I hope they're helpful, but just to pay back a little bit, I mean, it helps, you know, go up in the rankings, and it's important that you do that. So take a quick pause, subscribe and like. Also, don't forget to come into the Pro Room. There is a promotion here that I'm running for this couple of weeks all the way to the end of May, where you can get into my room for the price of 1 month. You can get 2 months, both into the main large channel where we talk about all this stuff, and also into the Bitcoin channel, which is a little bit cheaper. So take advantage of that, because you know, you might find some interesting stuff in there. All right, so this is the volatility of the VIX. I actually shorted VIX here at about 31 today, and I'm looking. It felt pretty bad when I do it. You know, it's like, man, should I short it? This thing is gonna squeeze me out. And then, but when it feels like that, it's like, you know, let's just get it done, and see if we can get a contraction in volatility tomorrow rather than an expansion in volatility. But if you don't hear from me tomorrow, you're probably going to be throwing up in the bushes. So let's see what happens. Which positions are going to work, right? I'm short nat gas, I'm short corn. You know, I'm kind of long this indices here. I'm short the VIX, so I got a pretty mixed bag. I'm not touching crypto just yet, but it's you know, it's an interesting basket in there for sure. So the next chart that I have in here is the yields. Wow, the yields. So they really haven't been pushing higher, right? They're stabilizing. It's almost like, you know, they're trying to tell us something, and that something could be that the Fed might be too aggressive, and they're probably going to bet on an economic slowdown and on Fed not necessarily easing, but just kind of slowing down their hawkish tone. But if you listen to Jay Powell yesterday, that was not the case. This guy is on a, you know, path to hiking, and he cannot see anything else. And he's like, nope, you know, we're set forward to fight inflation. Well, the markets here are becoming slightly dislocated, my friend. And I think that, you know, you might want to take a second look, you know, tonight when you're sipping out of your whiskey, you know, watching a show on Netflix. Think about, you know, your good friends from the market here and throw us a bone. See if we can get some rallying in here in the risk assets. Anyway, the yields are definitely kind of flattening out. You can see that maybe the long end of the curve here, look at the 20 and the 30, they're dropping at the higher rate than the 10s here and the 2s are. And also the shorter term rates, because the Fed it's very aggressive on this curve, on this end, right? So here is the S&P 500 at the bottom, you know, not a new low. So interesting stuff for sure. You know, don't forget to subscribe and like. I appreciate you being here. Leave your comments. Come and visit me in the Pro Room, and I wish you good luck. I'll see you tomorrow. I have a webinar actually tomorrow morning for my members from 6:30 in the morning till about 7:38, that we're going to go through cryptos, alts, and other stuff. So if you want to join, you know, come over and say hello. I'll see you later. Bye-bye.